Hello, good evening, ladies and gentlemen, traders and investors. Alex from MarketWise Asia. Thank you so much for being here and being on time today. Okay, just nice. The time now it is 8 p.m., 5th of September 2024. So for the past, 1 week or so, the market has been coming down, right? Okay, so how do you guys feel about the market right now? Okay, anyway, if you guys can hear me loud and clear. I think people are starting to stream in already. If you can hear me loud and clear, okay, please say a hi to me in the chat box. Okay, in the comments, say a hi to me. Okay, right now there are people streaming in already. Okay, more than 40 of you, and I believe more and more will be coming in. So if you can hear me loud and clear, please say a hi to me in the comments so that I know everything is good, everything is well. Okay, I won't bite lah. I'm very friendly. Okay, just say a hi so that I know everything is good. Okay, that's it. Okay, can or not? Yes, hello, David, hello, Ivan, thank you so much. Okay, Edmund, Larry, okay, all good. Thank you so much. Okay, thank you so much for being here. So I hope you guys already had your dinner already. Okay, by the way, okay, any of you here, this is the first time, okay, you are hearing, okay, Jay Toon, the founder of Swim Trading, okay? If this is the first time you are hearing him or seeing him, just type number 1 in the chat box, okay? Type number 1 in the chat box. I can, David, okay? Or you have heard of him many, many times already, okay? Just type 2 in the chat box. Or just type 2 in the chat box, okay? Or I think quite a number of you already heard of him. Fantastic, okay? So today's session, as I mentioned, okay, it is relating to the market condition recently. The market has been, pretty unstable, has been coming down, okay, especially for the big cap. So today, all right, Jay is going to share with you how to navigate, okay, the potential US recession, the US recession fear, and the main question, will the best take over the market, okay? And of course, okay, there are a few learning points that, you're going to take away from tonight's session. So you will learn, okay, understanding the economic indicators signaling a recession, okay, and the strategies, okay, for protecting your portfolio during a bear market and also spotting opportunities, okay, amid the market decline, okay? So for those who are very new to Jay, I just want to do a very quick introduction of Jay over there. Okay, so Jay embarked his trading journey in 2009. Okay, and he has found consistency and has been trading independently. Okay, for the last 15 years or so, and he has been trading in the market actively since 2011, and is well versed in equities, okay, options, and index trading. And having traded each of these market extensively, he built his trading philosophy on the concept of consistency. Okay, and he is also a certified ECTA certified trainer, having the advanced certificate in training and assessment. Okay, so today, without much further ado, I will just invite Jay onto the stage right now. Jay, are you there?
Hey, hello, Alex. Hello,
Hey,
everyone.
Jay, thank you so much for being here. As usual, okay, Jay is my good friend. His hair is still as high as normal. It's still very neat. Okay, my hair is, bolat, like the current market, just keep dropping. Right? Okay, yeah. So I think, as usual, for those that have attended his webinar, Jay has a lot to share with you guys regarding the market condition. He has a lot of things to share, a lot of knowledge to share, a lot of insights to share. So without much further ado, okay, I will pass the time to him, but don't worry, there will be a Q&A later. So, okay, you have any question, okay, please submit your question, okay, in the Q&A tab. You should be able to see the Q&A tab under your screen. If you're using a mobile, it is also below the below your screen as well, okay? So without much further ado, the stage is yours, okay? So during the Q&A, I will be back for more action, all right?
Great. Thank you. Thank you, Alex.
Mm.
Right. Let me see now. Let me just close out the correct window. Okay, let me share my screen. Hey, what's up, everybody? If you can hear me loud and clear, can you just help me type hello, everyone? Just let me type hello in the chat. My name is Jay, and we are ready to go. I see a few familiar names. Edmund, why are you here? Ivan. All right. Hello, everyone. Pei Wen again. Very good. How was your evening? Hey, Wang Bi. Hello, hello. Hi, everyone. All right, good. So welcome to tonight's webinar. And tonight, right, I want to share with you how you can be navigating the market through this, I don't know, recession fears, right? As of late, if you can see, maybe from just 1 week ago, we have seen the market drop quite a significant bit. And I want to share with you how can you deal with this, what to expect from this, and how to navigate yourself moving forward. And as usual, if you've got any questions, you do see a is there a question and answer? I think there is, right? I think there is, like you can see there's a question button right there, and then you can just post your question over in the Q&A section. I will have time to reply to your questions later. And of course, as we are going through any course of this sharing right tonight, you have any particular thing that yeah, you touch on a point, is pretty interesting, then if you want to seek for further clarification, then of course, by all means, please do ask me the questions as well. Okay, so would that be good? If that's good, please type good in the chat for me. All right, thank you. Okay, so my style of I can see do we have like new? Okay, I think David is new. Boo versus bear. Okay, so David is new. Most of you would have at least heard me for a couple of times now. My style, right, when I run webinars, right, I always, even though this is virtual, this is not recorded, you are spending your time here with me, I'm spending my time here with you. So I would love to have a conversation with you instead of just, running a very one-sided presentation where I just keep going on. Just doesn't make sense. So I would love to have this conversation with you in the next 90 minutes. Would that be okay? How many of you would agree to give me your permission to interact and to converse with me? If that's okay with you, can you please type me in the chat? All right. Great. Excellent. Thank you. Okay. So now on the US, right? On the US market, what has happened? Let us do a very, very quick recap first. If I were to compare all 4 different US market, now, before I touch on this, can I just get to know what market are you trading in mostly? How many of you trade the US market like I do? Please type US in the chat. If you trade Singapore market or Hong Kong market or Malaysia market, can you just let me type the country of which you are doing the trading in, right? Just let me know. It's for me to know. US. Larry will be US and Singapore. Jen will be Singapore, Hong Kong, US. David, Hong Kong. Great. Hong Kong recently kena hantam. Kena hantam left, right, center. Hang Seng. Okay, great. So tonight, whatever that I'll be sharing, majority of it would be using the US market as an example for a few reasons. Number one, because the US market is obviously a leader in across the stock market, across the global, right? We have a few key areas, where the markets are concerned. We have US, that's one of them. Then we have the whole of Europe. Then, of course, we have Asia. Asia can be divided into 2 parts. You have literally Asia, or Asia, Japan. So these are the 4 main markets in the world, right? Collectively. So US, obviously, is just US. Then for EU, you have Germany, you have the, I think Britain is considered there as well. Then for Asia, you have Singapore, you have Hong Kong, you have China, and then Japan is obviously Japan. Okay, so there's Nikkei. So these are the various few places that we are looking at. And for me, right, I also look across them, even though majority of my actions are in the US. I do track across different markets as well because of this simple concept called money flow. Can everyone just type money flow in the chat? So what are all this? I want you to envision, all right? So for now, just let me type money flow in the chat. I'll give you 10 seconds to type it. Thank you. So if I were to, okay, the candles are very distracting. Let me bring it to one side. Yeah, so at least I have clear space. It's like that. Okay, good. So I want you to envision this when we are looking at financial markets, right? Each of the financial market is like a chair. All right. I suck at my drawing, so I'm not going to draw a chair here. The only drawing that I know, right, is a stick man. The only drawing that I know is a stick man with my signature hairstyle. And this is the only drawing I know. All other things are like shit, I don't know how to draw. So I want you to envision, right? First understand how this financial market is being how exactly it is working, because a lot of us, when we come to trading, right? When it comes to trading, we just jump into the market itself and then we just immediately apply our analysis, which is fundamental analysis, technical analysis, cyclical analysis, or all sorts of other analyses, all right, in place. So before we do our analysis, right, I want you to understand this big picture first, is that the whole world, the financial system of the whole world, given that you have different asset classes, given that you have different geography, they are all connected. Connected by what? Connected by this thing called money flow. Because money is a finite resource that is created for the economy. All right. So since money it is a finite resource, then it is all about allocation. They will be overweighing on certain territories, certain asset classes from time to time. What I want you to look upon them, right, is like as if they are a chair on its own and they are playing musical chair. So money will be flowing from here to here, here, then after that, maybe here to here, here to there, and then there flowing to here, here, maybe flow back to here, etc. And any one point in time, right, only one or two asset class would be pumping, would be running. And like, for example, most recently, gold have been running up quite a fair bit. Cryptocurrency, on the other hand, has not been performing so well. And for stocks, right, Asia stocks are kind of gotten beaten down, right? Japan also got beaten down because of the yen carry trade reversal, and they're trying to undo the yen reversal, rather the yen trade. So they're trying to reverse that, reverse Uno. They're trying to return all the yen back. That's why yen prices go up, appreciate quite a fair bit, all right? So understanding this, right, all of this, right, will have a impact, all right? All of these factors that are ongoing will have an impact on where the money flow, how the money flow, and the rule of thumb is that money will always flow to the asset class or the area that gives it the highest ROI. Can everyone type ROI in the chat, please? All right, I'm going to give you some time to type while you're going to drink some water. So money is always looking for ROI. And be it, it can be ROI from the US stocks, it can be ROI from the Hong Kong stocks, it can be from Singapore stocks, it can be from property, it can be from other asset classes. That's fine. It's always about how you deploy it, how the big boys, the institution, where they deploy it, how they deploy it, and where maximizes their ROI. So when there is a mass exodus where we have flight to safety, right? That means when the whole world is going down, recession fears getting in, then where the money is going to, right? It will be the safe assets, the safe haven, which includes mostly, I would say, only bonds, if not cash. So when recession set in, all right, when recession sets in, be it a sluggish performance from the US, I don't care whether is it, initiated from the US or is it from China, because China right now, it is really struggling, all right? China is struggling. Japan is like, okay. Europe, so lah. But US, there is slated to be a recession sometime next year. And then now, China is really, really slowing down. Their stockpile of commodities are really piling up. So the productivity of the whole country, right? The demand is simply not there. And the PBOC needs to step in to ring fence the banking system so that they want to reduce the mortgage rate in order to revive their property market. So that's what is happening over in the China part of things. That's why, for Hong Kong, being a very close proximity to China and being the de facto capital market to the world for China, on behalf of China. So we have a lot of funds that are outflowing from Hong Kong, from China, and into other areas. And as far as I'm concerned, right, where are they flowing to? A little bit of that flows to Singapore. And then for US, the prospect is still with the US, but with US slowing down as well, we should expect, right, the money flow, when shit hit the fan, then the money flow should flow into something safer, which is just bonds or cash. So once you understand this relationship, then it makes the flow or the understanding of, what I'm tracking, then it gives a context to all those things that I will be sharing with you. So far, is everything clear? If everything is clear, you can understand, can you please type okay in the chat? Yeah? So get this concept first. It's all about money flow. It's not about, like one market go up, one market go down, and it's like headless, your head chasing after your tails. It shouldn't be that. It should be a overall overview of, okay, now money is this is the global financial system into different asset class, different geography. Right now, money is flowing from here to there to here, and then blah, blah, blah. So once we track this, right, we will be able to know where is the next opportunity, number one. Number two, how long more the music still goes on before shit hits the fan. That's number two. And number three, right, what kind of action, most importantly, what kind of action you can be taking before shit hits the fan, and what kind of action you should be taking after the shit hits the fan moment. All right. So basically, this is the whole entire overview of what you will be going through with me in the next no longer 90 minutes, but about 75 minutes. So I'm adamant to end on time because Alex every time say, you talk too long, every time talk until 10 p.m. I want to end at 9:30 p.m. tonight. Okay, so would that be okay? 9:30, would that be okay for all of you? If that's good, can you just type good in the chat? So of course, meanwhile, you got any questions, right? Don't paise, just ask. Okay, if I talk too fast, let me know. If I talk too slow, let me know as well. Wait. My writing pad is not writing. Oh my God. Sorry, guys. Give me 1 minute. Let me just... Oh, okay. Done. Finally, it's writing. Okay. So with this in mind, now let me bring you back to the US market itself. Okay. Let me bring you back to the US market itself. For the past couple of months, if you were to compare across 4 different markets, right? So this one is Dow Jones. So this is Dow Jones. This is S&P 500. This is NASDAQ. And then this is E-mini 2000. Okay, so also known as small caps. By looking at this, right, in the past 6 months or so, all right, in the past 6 months or so, let me just zoom it in like that, we can see very clearly the market has, obviously from April onwards, embarked on a very, very nice run. From April onwards, nice run. April onwards, nice run. April onwards, nice run. For the smaller stocks, right, they actually are quite a late beneficiary. And what happens lately is that there was an all-time high made sometime in July, and the same all-time high was made in July. Then this all-time high was matched recently on the Dow Jones, whereas on the E-mini, right, the all-time high was just shy away. So this time around, it's just shy away from there. So what it tells me, right, very, very clearly is that the preference of the current market, for S&P 500, we are looking at the best performers in terms of their earnings. Okay, so for the business, the bottom line, 2 consecutive quarters of earnings must be above a certain market capitalization, then they will be inducted into S&P 500. Next, right, would be NASDAQ, which is around 60% technology. All right, so can everyone help me type SPX and NDX in the chat? So this explains what the 2 categories of stocks are, what goes inside this index. For S&P 500, the best performers. This is currently, as of now, is around 30% technology. Currently, because the tech companies are the ones that are making a ton of money right now. All right. The tech companies are the ones that are making a lot of money. All right. So that's for that too. And then for Dow Jones, right, this is DJI. Now, for Dow Jones, we are looking at 30 companies, which are supposedly the 30 largest or the 30 largest industrial weighted companies. And then followed by E-mini Russell 2000, that is 2,000 of the small companies. So why do I want to have this distinction, right? If I can divide the market into, I would say the top half and the bottom half. Top half being majority, the big companies and tech, all right? So big tech, that's the team for up there. For bottom, right, it is non-tech plus small, the smaller companies. So these 2 distinct groups, can you all see this distinction? How many of you can now see this distinction? If you can, please type me in the chat. So besides Edmund, Larry, Yvonne, for the rest of you, all okay? You getting this loud and clear? Can you please tell me, type me in the chat? Great. Thank you so much. Excuse me. Now, so with this in mind, right? With this in mind, how has the market behaved and performed? Right now, right? For now, whoa, one shot. What is this? So, for RTY, for S&P 500, right? The market has run up quite a fair bit. This time around, falling short of the all-time high. For Nasdaq, given the weakness, it has run up the highest, and this time around, fall shorts the most. Whereas Dow Jones, playing the laggard, has kind of falling into this. It does match the previous all-time high. The smaller companies right now is also about 3/4 way there. So if you talk about in terms of the ranking, in terms of the performance, right, I will think I will rank this as number one. For Dow Jones companies, they are actually ranked number one in spite of in the recent move. In spite of, lately the market just tanked about 2%. This is still possessing the highest strength. All right, that's for Dow Jones. The second one would actually be S&P 500. And then the third one would be the smaller companies, followed by the fourth one, which is technology. So in terms of the hierarchy, Dow Jones companies are the strongest, followed by S&P 500, followed by the small companies, followed lastly by Nasdaq. How many of you can see this hierarchy? So in terms of ranking, you go DJI, then followed by SPX, followed by RUT, and then finally NDX. This is that ranking or in terms of their strength. So how many of you can see this now? Type yes in the chats. All right, good. Thank you. So Kiat Siong is saying, given the inverted interest rate yield curve, you mean, normalized between 2 years and 10 years, we are expecting the market to crash in 6 months. Shall we invest in bond? Number one, your question is, shall we invest in bond in emerging markets or developed market? Number two, investment in money market fund. When a crash comes, we have liquidity power on our cash. Number three, buy real estate stocks or property stocks, especially Hong Kong market, because they are beaten down so hard and a lot of them have very good dividend yield. And will you be able to run before the crash, or you will crash without a run? Oh, that's a huge, long question. So to answer that, right, one by one, I think number one, is it necessary for you to kanchong right now? And since you already said it's 6 to 9 months, we're expecting it to crash. I'm not expecting a crash. I'm expecting like a pullback. Yes, probably. Yeah, but I don't think it will crash. Like sudden just dive and crash. I don't think so. Right? 2 years and 10 years is just two data points. Be it, for bonds, you have 3 months, you have 5 years, 7 years, 10 years, 20 years, so on and so forth. So 2 and 10 is just two data points. The whole yield curve is still inverted. 2 and 10 can be flat, but the whole yield curve is still inverted. Should you be investing in bond? I don't think you need to do so right now. Again, like you said, it's only about 6 to 9 months time. And if anything, right, you say bonds, I say okay. You say cash, I say okay. That's to your question number one. Number two, to invest in money market fund. Currently the money market fund, the interest rate is going to drop moving forward, definitely. From September 18 onwards, which is 2 weeks from now, it is definitely dropping. All right, definitely dropping. And money market fund, yeah, I think you choose one. You don't have to choose like bond and money market fund. I don't think so. So when a crash comes, you have the liquidity power on a crash. Always have some cash. I don't know how it's a portfolio. I don't know how big is a portfolio. Well, from if let's say you were to tell me, you were to share with me, say your portfolio is 200,000, 500,000, for example, then yeah, of course, park some in this kind of yielding assets where it still yields you about 3%. I think that's fine. But if let's say your amount you're looking at is like 20,000, 50,000, why not just hold cash? Make it easier, right? Yeah. So that, I mean, that's my honest opinion. For real estate stocks, property stocks, especially Hong Kong market, I don't want to comment on them because I think they are dealing with a systemic issue. The lack of Chinese buyers is a real pressing issue. I don't think any amount of I don't know. To me, is I just don't think yes, they are cheap, definitely, but they are cheap for a good reason. Money is flowing out from them for a good reason. So on your point on number three, I got no comments on that. I think if you feel good about it, sure, of course. But personally, I don't think that's not something I would do. All right. Because from what I'm saying, however, I'm not sure whether you run before the crash or crash without a run. That it sounds to me that that is you're trying to time the bottom of the market. So let's face the fact, we can never time where exactly is the bottom. We will never know where exactly is the top. We just have a rough idea where it is, and I don't think it is right now. All right. So what is the whole purpose now? By saying this, right, I'm not scaring you into a recession saying that, oh, wow, you should be selling everything right now. I think that has to be established first. Is everyone clear on that? If you are clear, please type number 1 in the chat. Fact number 1 is that we are not heading into a recession yet, or at least the statistics don't show us to be so. But will it go that way? I don't know. Nobody knows, right? Obviously, if you ask me, nobody knows. Only one thing will know. He will know. I am not him, but he will know. The Cai Shen Ye will know. So nobody can safely project when it will happen on this day, this date. I don't think anybody can do that. But based on the developing science, my methodology when it comes to trading, right, is very simple. I always look for strength, and I don't think that there is anything for us to be worried right now. So much so that, you know, we are looking to for a panic exit. I don't think we are at that moment yet. Now it's not even the shit hitting the fan moment. Now the fan is not even turning. And maybe the bull have some shit. Maybe that's it. So in the grand scheme of things, I need you to know this, and I need you to acknowledge this. So there is no need for you to preemptive take any action. Wow, 6-9 months in advance, then you keep sitting on the cash to watch the market go higher and higher. You'll be walao. And then by the time you decide to enough of the walao, then guess what? You get in, right? Then you'll be buying highest or highest, then the thing crash. So it is what it is. This is just how the financial market works. All right. But nevertheless, thank you, Kiesong, for your question. I think that is a very, very well crafted and very well crafted and comprehensive question. All right. Hopefully I've answered that. So is everyone all good? If it's good, so far so good. If everything what I say makes sense, can you just let me type good in the chat? Let me see. Do we have in the room? I just want to take a look. Because sometimes I always see the common names. Okay. Interesting. Audrey. Oh. Hey, Bing Hua. What are you doing here? Benson, what are you doing here? A few familiar names. Cheng Ang, how are you, man? CM, hello. Yeah, see a bit, a few names here and there. Okay, great. Okay, Ivan is here. Familiar name. Because every time we run a webinar, right, more or less I'll see these few names. So we have KK, we got 2 KKs and we got 1 KL. Very good. Lily, okay, good. Hey, Sean, you're here. McKendrick. Shanley, you're here as well. Okay, great. So good. So far. Yes, all of you are here. Familiar names, right? So by this measure, all right, by this measure, I want you to know that we don't have to kanchong lah. Okay, number 1 is my kanchong. Number 2, now, can I show you and can I go on to share with you what am I tracking exactly, so that you are tracking the same thing and there is no need for you to kanchong as well. Nice lighting, like disco, right? This is real. This is not a virtual background, right? This is real. I got one lighting there, one lighting here, and the rest at the back. This is my study room. Okay. So how many of you will want to find out what exactly am I tracking? Ask me what. Type what in the chat. I want to share with you those things. Good. So now you are clear with the hierarchy. Later, this hierarchy will come back to help us identify where am I exactly going to focus on. All right. So now let me take a look at what I'm tracking. So for what I'm tracking, right? Number 1, I think in terms of the news, right? So let me just highlight the 2 schools of thoughts to you first. Previously, leading up to this, all right, from June 2022, leading up to this, what do we have? We have a interest rate hike cycle. So interest rate hike cycle, where the interest rate are getting higher and higher each of the FOMC. Number 2, as of this year, from June 2024 onwards, I just want to make this distinction. It is no longer looking at interest rate hike, but instead we are looking at interest rate what? Drop. All right. So we are looking to reverse that. So now we are in an interest rate drop cycle, which is happening very soon, giving 2 weeks time. All right, just in 2 weeks time, that will be the first drop. So what was interesting or important before were things like our CPI, PPI, and of course our inflation rate, and then our core PCE prices. That was what was important. All right, core PCE prices. So those were the news that were dominating the the sentiment. All right, those were the news that were dominating the sentiment. And over here, right, this was before. Now, I'm willing to bet my hair. Okay, sounds funny, but I'm willing to bet my hair. This is real. This is not a wig. This is my hair. So that moving forward, right, it will no longer be these few in contention. It will not be CPI. It will not be PPI, inflation, core PCE prices. It will not be any of those. But instead, in this interest rate drop cycle, what will matter more? / recession. All right, / recession. I think tonight we will have a bullish reaction. For sure, we'll have a bullish reaction. So for now, what is going to matter is number one, we have our manufacturing PMI. So ISM PMI will matter, number one. Number two, looking at this, so ISM PMI, that was on Monday. So on Monday, okay, largely still in line. It's a contractionary phase, but still in line. Then number two, right, we have the unemployment claims. Number three, we have the non-farm payroll, which this is the highlight of the theme right now. Just like previously, inflation was the headline. Now, NFP will become the headline. Can everyone type NFP in the chat? Can everyone just type NFP in the chat? Then another one would be unemployment rate and so on and so forth. I think these will be the few big ones that will dominate this news cycle moving forward. All right. So it will switch from inflation price base to what base? To recession base. So it is just logical, right, for us to see. Okay, it's just very logical for us to track these moving forward and give a weightage to these news, especially NFP moving forward, because all these are the precursor, the number one touch point to tell whether the economy is sinking into recession. So is there a, is there like a very kanchong, I must sell now, I must liquidate now? Is it gonna happen? I don't think so. But moving forward, it's all about the unemployment claims. Is it higher or lower than expected? Like let's say claims, the lower the better. ISM PMI, the better the recovery, the better. Non-farm payroll, obviously the higher the better. Unemployment rate, the lower the better. And right now we are looking at about 4.2%. Tomorrow on a Friday, then we will know it is going to come down to about 4%. What am I talking? Then we will know whether it will come down to 4.1% or it is going to climb to 4.3%. So more or less like that, or you can come out some other numbers. Previous one was 4.3%, expected 4.2. If it comes out 4.2, it will be in line. If it comes out 4.1, I think the market will jump up. If it comes out 4.3, then I think the market will start to tank down. So all this moving forward will become important, just like how the market was reacting to prices before CPI, PPI, inflation rate, core PCE prices. Right now, moving forward, as everyone fears and eyes are on recession, they will be tracking on these few things. All right, they will increasingly have a higher weightage towards the impact and the sentiment in the market. All right, is everyone clear? If this is loud and clear, please type clear in the chat. Okay, So any questions so far? All good? Okay. So with this in mind, right, let's look at some of the trend of these things, all right? So if you look at GDP growth, of course, GDP growth will open up, unemployment rate, non-farm payrolls is over there. Interest rate is going to get cut already. Manufacturing PMI is there. Then services PMI, I'm going to open it up. If you look at labor, Then non-farm payroll, initial jobless claim, that's there as well. I will open that up. Then pretty much, I think it is about there already. All right. So these are the things that I'm looking at. Let's go through one by one. Number one, the US GDP growth rate. If I were to put on the last 5 years of growth rate, you can see that the US economy, it is pretty stable right now. How many of you agree with this? The US economy for the past 3 years, with the exception of COVID, with the exception of a technical recession starting of 2022, but since the last 2 years, all right? Since the last 2 years, exactly from June 2022 onwards, the growth have been quite modest. The recovery have been quite good. That is led by technology. How many of you can see this and you agree? Type agree in the chat. All right. So for GDP growth rate, is there anything that I should be worried about on a recession is coming? Right? Is there anything that you should be worried about? Or is there anything that you think I'm worried about? Yes or no? Can you help me answer this question in the chat? Looking at the statistics. So let's call a spade a spade. All right. Let's not jump to conclusion. Let's just all look at the numbers and then we deduce our position, our bias from there, rather than recession coming, I sell everything now. There's no need lah. Trust me, there's a good run that is running out. And if you don't take advantage of this, you will kick yourself down. You will kick yourself in the foot lah. All right. So later I want to share with you some details. But looking at this, GDP growth rates, I don't think it is getting affected right now. Right now, it's still quite stable. And as far as this is concerned, okay lah. I mean, just music still goes on lah, right? The music is still blasting it loud. Nothing is happening. In terms of the unemployment rate, this is the actual fear that is setting on for this year. So in the grand scheme of things, if you look at this, walao. But actually, if you look at it, it's not so serious. All right. In COVID, of course, the height was about 15%. Then it hits a bottom of about 3.5%. This is very, very normal. And right now it is picking up. So as this thing picks up, right, this is definitely tomorrow, as we are looking at NFP, tomorrow, all right, tomorrow, where is my calendar? Here. Tomorrow we are looking at NFP, non-farm payroll, will be announced 8:30 p.m. tomorrow. Together with NFP, it will also announce the unemployment rate. And everyone's attention will not be so much on GDP growth rate. I think that's pretty stable. But for unemployment rates, it is picking up. All right. This is something that is of some interest to the market. So if it comes in higher than 4.3, you can expect the market to drop. All right. If it comes in higher than 4.3, that means it's continuously inching up. 3.9%, 4%, 4.1%, 4.3%. Then if it goes 4.4%, then you can expect the market to have a adverse, which is a bearish knee-jerk reaction. Is everyone clear? If you are clear, can you type clear in the chat? If everyone is clear. All right. Okay, very good. So unemployment rate, done. Kiesiong, if you don't mind, Kiesiong, can you change your, I know you're sending me the messages. Can you change it to everyone so that everyone can see your message as well? Because now only I can see your message. So you say if there's a drop in GDP, however, GDP is retrospective, means the recession happened in the last 3 months before it's published. Fair enough, yes. And my reply to that would be, then what are the other things that people will be tracking? I mean, everyone is referring to that, right? So that is just one of the things that I'm seeing, right? That's just one of the things. But what else am I looking at? I'm always looking at jobs, because if unemployment goes down, contraction, manufacturing, everything goes down, services go down, then chances are it will lead to a contraction in GDP before they even come on, that's where you're right to say that it's retrospective. But everyone is just have access to this. There's no insider data. There is no faster source of data as well. So hopefully you get where I'm going with. All right. Now, so with this, right, non-farm payroll, you can see that non-farm payroll is the number of jobs that have been added. It has been pretty consistent. Of course, barring a few, during COVID, this thing dropped. And then after that, this one hit the highest. But if you look at the past 1 year, with the exception of April, which it comes in 108,000, With the exception of that, I think it's been pretty robust. Just that the previous one comes in at 114K instead of, I think they were expecting 100 and I can't remember the number, 170 something, 171K or 174K. I can't remember that. That was the report that was announced last month. Okay, so that's why the market, right, how it reacted. If I can show you the charts itself, how would the market reacted would be here. I believe this was a Friday. This Friday, all right, the 2nd of August, right? This particular Friday that I am seeing on screen right here, this was in reaction to the non-farm payroll disappointment from 117, from 170 dropped to 11 something. All right. So that was what came in. That's why the market dropped. And then Monday, right, there was this Japan yen carry trade reversal, which everything just hunted downwards, and then thereafter it just bounced upwards. All right. So what is gonna happen now is that you can see the past 2 days, right? Yesterday and today, the market has not been going anywhere much. On Tuesday itself, right, what happened was a major risk off due to China. So China is really getting into some shit right now where their economy is just not producing as much. Then they have a stockpile of all the commodities that are literally not going anywhere, you know. So the demand is down. That's why oil also down. You see gold also down a bit. So that's exactly what is happening. All right. That's what is happening. Then so tomorrow I'll be looking at this and knowing that we have what is the expectation? We have 164K. Any numbers that drops below, all right? So any numbers that drop below this 164K, I would expect a bearish reaction. Any number for unemployment rate that is higher than 4.2%, then I would expect, all right? The previous one is 4.3. They are expecting 4.2, which is hovering around there. If it comes up to 4.3, if it comes up to 4.4, all right, this is the expectation, then I would expect a bearish reaction towards that, all right? So that is what I'm tracking, and that's how I'm reacting to it. Is everyone clear? If you are clear, can you please type clear in the chat? All right. Good. Kiet Siong, my interest is not in buying bonds. Bonds doesn't make money. My interest is in trading the explosive stock. That is what makes money. All right. So that's for non-farm payroll. That's for unemployment rate. I think that has been done. Then manufacturing PMI. Now, this manufacturing PMI, right? There was a uptick last year. There was an uptick last year where it was like 40 something, and then suddenly, you know, towards this year starting, it was expanding. So this expansion, right, actually brought the industrial stocks to revive starting this year. So as you can see, from last year onwards, right, it has been like in this territory for a while. So contraction below 50 is contraction, and suddenly it's like picking up, right? Then it goes into expansion. So from start of 2024, it actually goes into expansion, and that has been translated to a very nice price action from the industrial companies. So if you're looking at Caterpillar, you're looking at all the builders, especially home builders, Lana Corp, Toll Brothers, TOL, LEN, XHB, ETF, all this, they are all doing very well. All right. Starting of this year onwards, they're all doing fantastic. All right. Very, very well. And I'm expecting the music to stop right now. Why? Because as you can see, if you're looking at the manufacturing PMI, right, which represents for about 20 plus 30% of the US economy, it is now heading back into a contraction territory. And the part that is really holding up this whole movement, right, is actually the builders. The builders are still, you know, holding well. And from what I see, I do think that the prices are going to flush down a lot lower. Not stopping where it is right now, at 128. I think it might even come down to about somewhere about 120 or so. I would think that a major run for XLI is over. All right. So looking at that, if it continues to stay in negative territory, the echoes that calls for a US recession would be higher. So right now, the bright spot is this. The bright spot in the whole financial market globally, right, is US. Then for China, it is really, really not performing all that well. So China, everyone is like, you know, just I don't know what's going on in China lah. So anyway, if I were to show you what's on the headline for Bloomberg, right? Then of course China every time he got this country garden home sales 1050. This is all in China. All right, this is in China. And then if I were to look for headlines regarding to China, right? Then you can see for China itself, their oil producers, the oil price also go down, supply chain, all of this, they are all literally going down lah. The commodity for China is not doing well as well. So this is really, really, really weighing down on the market. And as of right now, that is, if you can give a explanation of what exactly happened, right? What exactly happened in this Tuesday when it tanked down like that, it's pretty much because of the Asia fears, right? Currently, it's because of this. And in this cycle itself, I don't think September the markets are going to go anywhere. If anything, I think September to early October, we should be looking at a more soft market, which is very nice because it sets us up for a very nice quarter 4. All right, it sets us up for a very, very nice quarter 4. And manufacturing, okay lah, consolidating a little bit. Then services, if you look at services, right, which is what makes up majority of the US economy, so the GDP from services is actually quite powerful. Not powerful, quite a big percentage. It is very clearly still in the expansion phase. So therefore, if you have any premature knee-jerk reaction saying that, oh, well, your recession coming, I fear I should stop everything, it's like, let me give you an analogy. It's like watching Final Destination or some ghost movie, right? And then you just get in real life, oh, hello, my house got ghost. You know, it's like that kind of analogy, like an extreme case, lah. All right. So you don't have to. All right. Right now, the bowl doesn't even have shit. The bowl is like, okay, people are expecting there's some shit going to form here, but as of right now, it's okay. But these are the things that I'm tracking. So of course, are they set in stone? No, they will change. They might change. So when they change, so should your expectation. That's why, for me as a trader, I'm tracking all this because once I know this, I know the sentiment, I track the money flow, then I know roughly what is my bias, how long more the music can go on for, and what action should I be taking. Did y'all how many of you appreciate this chain, this flow of thought? How many of you appreciate this? Can you type me in the chat if you do? Yeah, like what Kelvin says, right? China cui liao. Yeah, lor, very cui. Really quite cui. So it's gonna take more than, I don't know, a concerted effort from the Chinese Communist Party or Xi Jinping. Basically, he's like the modern emperor already. So it will take a concerted effort from them, right? To really revamp the system, which I don't know. I don't know what they want. After all, they are communists, they are not capitalists. And honestly, I have no idea. So that's why there's a very, very big no-no over there. If you ask me, if there's any strength, if there's any transparency, it's still in the US market. That's where I'll be focusing on, or at least that's what makes me more confident, and comfortable. All right. So Calvin, they just want to control the world. I don't think they can, but they are trying to. They are trying to be difficult at times. And now it's in a catch-22 situation where as much as the world needs China, China needs the world as well. And a lot of all the emerging markets, right, instead of the funds flowing into China, in fact, there have been funds flowing out of China and into where? Into economies like BRICs, into economies like India, for example, is a huge beneficiary of this whole capital market, this capital movement. So it is what it is. I mean, we can't change. We can't change all this. We are not influential enough to change all this. So we just track and we just move lah. So as far as I'm concerned, if you are looking at the strength of the economy, yeah, manufacturing is going down, but services are still holding up very well. And we should be looking more towards services because if you were to look at GDP from agriculture, or rather GDP from manufacturing versus GDP from services, GDP from manufacturing is about 2,334 millions, right? Then GDP from services is 16,442. So it's 8 times larger. 8 times larger. The second most important pillar, manufacturing. Most important pillar, services, where you have your technology, you have your banking, everything comes under services. So if they don't squeeze, then the economy okay lah, still okay lah, right? So you shouldn't be too worried about a 2 years, 10-year. I know Kiet Seong has been bringing this up, looking at 2 years, 10 years. Oh, then if no inversion, right now it's still inverted. Right now it is not yet undoing itself. It will uninvert very, very quickly when the interest rate starts to drop. All right. It will uninvert very, very quickly when the interest rate starts to drop. And then that's where it goes to the normal yield curve. That's where they will be expecting some recession. So as far as I'm concerned right now, we are in a, where are the threats? The threats comes from one of these two things. All right. So the threat to our bias. So what is my bias? My bias is that I am still of the bias that it will be a bull run that will push S&P 500 to hit 6,000 by 2025. So there is still quite some room to go. That is my honest opinion. Why? Because the initial reaction to any rate cut will always be bullish. The initial reaction will always be bullish. And that should give us and sets us up for a nice movement, all right, towards the end of the year. So if you are like a fearmonger, doomsayer, probably you wouldn't like what I'm going to share with you now, because my bias is still bullish. Because fundamentally, if you look at the macros on the market, you look at the condition on the market, nothing is scaring us, right? Although people can say that there's no reason why prices are going so high, blah, blah, blah. But the earnings, most importantly, if you look at across board S&P 500 earnings, the companies are still earning well, right? Their earnings, there is actual earnings growth that supports the price. Of course, some stocks like Nvidia receive a lot more attention than it's supposed to be. The prices temporarily got pumped up to a very artificial high price. I think, yeah, I mean, all of us will encounter this every now and then. But if what I can see, which is what I'm using, what I'm showing or seeing just now, right? If the strength is in the Dow Jones Industrial Company, which is what I've gone through just now. Number 2, it is the S&P 500. Number 3, it is the Russell, all right? And then followed by number 4, it is then the NASDAQ. What does it tell me? It tells me that these two common denominator is that the bigger companies are the ones that are stronger right now. And then if you think about the risk, right? If let's say the market is all fearing a recession or a bear jump off, like a cliffhanger, the prices are just gonna fall cliff, drop 30% out of nowhere, just like that. Then wouldn't it makes more sense that the smaller companies like Russell's get thrown out of the window first? Does it make sense? Whatever I've just said, this sentence, does it make sense? If it does make sense, please type yes in the chat to acknowledge that you are following this point. All right? Does it make sense? Great. And since it makes sense, right? Since it makes sense, I'm going to call a spade rather than jumping to conclusion. The small companies are not getting thrown off. In fact, I think in terms of strength, right, S&P 500 and Russell is actually very, very close, right? They are very close. And the bigger companies are the ones that are getting rotated in, meaning what? Meaning if I'm looking at funds flow, majority of the funds are flowing into here, followed by an equivalent to the other two, all right? And if the market is crashing, if the market it is not so strong, then why would the money be flowing into the Russells, the small companies? It just doesn't make sense, because if today you only have $1, would you be more comfortable putting your $1 with Apple, with Microsoft, or let's say with 18000flowers.com? Like, what the heck is a 18000flowers.com? It's an actual company. You can Google. Okay, so this tells me that the sentiment is still not bearish. So please do not jump the gun and it is good to be smart, but it's not good to be overly smart, meaning 强的货卖给强. So the Hokkien saying, okay, you can be smart, but don't be overly smart. So there is no observation. There is no observation that the smart money are flowing into this kind of, running for cover. So as far as I don't see it, my bias is still bullish. So why do I think my bias is bullish? Because the company, the economy is still doing okay. Services is still doing okay. Services contributes a large part to the US economy, and it is doing okay. Manufacturing may be slowing down a little bit, but it's 8 times smaller than services. So I would be looking at technology for the next wave. I would be looking at, of course, if it gets too pricey, it gets thrown out first. That's what happened. Nasdaq gone up like crazy, crazy high. Your Meta went up crazy high. Your FANG stock goes up crazy high. It's a magnificent six. Why? Except Tesla. Tesla never go anywhere. So your magnificent six, went up very, very high. Together, with NVIDIA, chip makers, all these are there. And they got overly high too short period of time. So therefore, now they are correcting itself. Therefore, in terms of the price movement as of late, it is not the strongest. But this throwdown, right? The prices flashing down also presents a very good opportunity. Guys, do you all agree in trading or investing, right? Do you agree in trading? Majority of the action revolves around, if you want to be profitable, it's about buying low and then selling high. How many of you agree that trading to make money is literally revolving around buy low, sell high? Do you agree? If you do agree, type agree in the chat, please. If you find it, no matter what I do, no matter what setup, it's about buying at a lower price, selling at a higher price, or sell at a higher price first, then later buy back at a lower price. That's called short selling, right? So in this case, when prices have already been beaten down, especially let's say services, the global on the macro front, right? Nasdaq, all this are still doing okay. Financial, Magnificent Six are still doing okay in terms of earnings is still doing okay. Then right now, because they were overly excited, the prices gone up too high, and currently they are being hit to quite a relatively comfortable and a low price. Like for example, NVIDIA, right? NVIDIA, if you're looking at NVIDIA, if NVIDIA was at $140, would I be very excited to buy NVIDIA? The answer is no, right? That's what I told my students also. I'm not excited to buy NVIDIA. So then when they asked me, right, when the prices were going up, they asked me, J, what price do you want to buy up NVIDIA? I'll buy somewhere below $100. So which got happen or not? Well, it did. All right, it did, but of course, it didn't go down to that 90 flat, right? It just hit 91 point something. So that was where it was low, and then it ran up from there. Okay, so NVIDIA doesn't make sense to buy at like 140. If it's like below 100, it makes sense. And right now it's like coming down again. So I'm just waiting, coming down right now. I'm just waiting. We just let me just put it to a side so that it doesn't interfere. All right, so that's on NVIDIA. That's all what the opportunities that we are looking at. And where is the threat? Number one, the threat is China. China is really, really slowing down, being the world's second largest economy. Being the world's second largest economy, right now, China, if they really do slow down, all right, if they really, really do slow down, that's where I think they will get affected, right? That's where they really, really will get affected. And so that's what I am looking at, all right? That's what I'm looking at. Is everyone clear with this? Is everyone clear? If you are clear, can you help me type okay? So that's source number one. Number two, it will be internally the US recession, of which I will be tracking using the things that I shared with you just now, which is our ISM manufacturing services PMI, initial claims, then of course unemployment rate. That's what I will be looking at. So if China goes down or China continues to go down, but if the US is holding out well, I think that's fine. Then we should not be too worried about the US is gonna, of course, it's gonna be softer a little bit. And traditionally, if I can bring this up, all right, if I can bring up the statistics and show you, all right. Traditionally, if I were to show you the performance for the S&P 500, can you see that for September, you have April, May usually is quite bullish. Then July is okay, quite bullish. Above 70% is what I call bullish last 20 years. For August, September, it's actually quite flat, We are actually looking at around 50%, meaning 50% of the September is up, 50% of Septembers are down for the past 20 years, right? So do we have an edge leading towards, do we now have an edge leading towards, let's say, like I want the prices to continue to go up like that? Not in this time period. This current time period, we do not have an edge. All right. This is my own indicator. So you don't have to like, hey, where I get this on trading. This is my own. All right. So in this period, August, September is really just so only. So what am I expecting? All right. What am I expecting? Very clearly. Okay. What I do expect is I want prices to come down slightly below. I think it will continue to be range bounded like this, but more towards the downside. I would expect prices to come down closer to about 5,300 for the S&P 500. So about 5,350 plus minus, somewhere around there over time. You give it like 1 week from now, 2 weeks from now, and that actually presents a very, very nice opportunity for us to take this trade up all the way where slated to close somewhere towards 6,000 by end of this year. So this is where, if you were to look when the window comes, right? The window actually comes somewhere between November and December, all right? Where overwhelming majority of 14 out of the last 20 years actually was bullish. So this is where I'm biding my time and waiting for the right prices. And I'm sure by now you would agree, if you want to make money from a market, it is really about buying low, selling high, which current prices, right, actually excites me because it allows me to buy low. Just doesn't make sense for me to, I mean, buy high, sell higher can but you make a little bit low. But buy low, sell high, it actually makes you a lot more. So I'm looking at these two threads that is going to foil the game plan. And my game plan is just SPX to 6,000 by 2025. So that is what I am looking at, and that's what I'm gunning for. And it is all backed up not just by my opinion, but what I have observed logically, as well as the numbers from the economy, from the macros that are backing up this viewpoint, right? So does it make sense, everyone? First and foremost, does it make sense to you? If whatever I've just shared makes sense to you, can you type yes in the chat? You find that it makes sense? So, okay, so besides Larry, Jen, Edmund, Gobi, Jen, are you that Jen that I know? Just curious. I'm just wondering who is that. Are you that Jen that I know? Okay, good. Makes sense. Now, so with these, right, what you are staring at right now, all right, what you are staring at right now, I don't mind sharing with you, right? If I were to do this, all right, so far, can I just check, guys, do you all learn something of value for what I've just shared like that? Does it create value in helping you to gain some clarity? Yes? Is it valuable? Oh, no, not the same Jen. Okay, can. No lah. Yes, okay, good. So you see, if you want to time the phases of the market, right, I think you would more or less agree with me when I say this. If you want to make money, right, because at the end of the day, it's not just about us being an analyst, not just about us knowing how to break down the market. If we want to be able to make money, how many of you are in the financial market and you got interested in trading and investing because you want to make money? How many of you are here for this purpose? Can you type me in the chat? Obviously, Edmund is one. Chingang is one. All right. Okay, great. Who else? Who else? Okay, great. Thank you. So let me see. Less than a dozen of you. Yes. Okay. So, excuse me. Now, if you want to time the phases of the market, then would you agree with me when I say this? If we are looking at the market right now, the rest came to see my hair. See it in real life, don't see on camera. This one real one. This one can touch one. Is real one. It will move. It's not a week. Everyone thought that it's a week. It's 8.5 cm tall. Just in case you are wondering, because I short, so no choice. I have to use my hair to boost the height. All right, thank you. Now, as I am looking at the market right here, I'm sure you will agree that if this on the left hand side, number one, versus on the right hand side, number two. So left hand side where you get a low and then it starts to trend and then it starts to trend higher. So literally you are able to do buy low and then finally sell high. And then number two, right, is like it is like trying to get higher, trying to, go sideways like this. So which market do you think is easier for you to achieve your purpose, to make money? Is it market one or market two? Can you help me answer this question? Exactly, the first type of market. So right now, as you know what I'm looking at and why I say that I'm targeting about 6K on S&P 500 by end of this year is simply because of these two reasons. How many reasons? Can you help me type the number in the chat? 2 reasons. Now, exactly like what Lily says. Number 2, require more short-term trading skills. Now, the two major narratives that we have on the market right now is presidential election that is happening in Q4 2024. So this is November 2024. The second one, right, would be the interest rate cut cycle, which is happening as soon as 2 weeks later. All right. So Q3, which is happening on September 2024. Now, why are these two major narratives for us to push S&P 500 towards 6,000? Because as the fearmongers go, as the perma bears, I call it, all right? So there are a few types of traders, some online personality, right? There are fearmongers, spreading fears, selling fear. Then of course there are also those personality that are perma bears. Oh, there's no reason why prices are so high, So I mean, let's just call a spade a spade. If you look at the US stock market, is it going up or is it going down? Obviously, it's going up. And if you look at the economy, the health of the economy, China is not doing so well, but US, is it doing well? Still okay lah. I mean, potentially there might be some shit, but right now the bowl is still clean. You get what I'm saying? It's not even like, oh, I'm prepared to throw this shit and hit the fan already, It's like my bowl is still clean. There's still nothing. So for me, I'm very objective, right? I'm not like perma boo, perma bear, or fearmonger. I don't do this. I don't abuse my position as a public figure like this. But what I do is I like to follow the facts. I like to look at things that I like to call a spade lah. I mean, in a nutshell. And have I proven, more or less, right? Have I proven that the US economy, all right, the US economy, it is still pretty robust? Have we gone through those numbers that points towards that? Yes or no? Can you help me answer it in the chat? Yes or no? Have we gone through all of those? Services, PMI, ISM PMI, pretty much gone through all of this, right? So is it going to get softened? Well, I don't know. Well, if it happens, then I would change my view. If it doesn't happen, then continue as it is, right? So given that the US economy is still quite okay, still bullish, but still decent, then guess what? The presidential election, it is likely going to give a bullish push towards to close up Q4 2024, and the initial reaction to any rate cut cycle would be bullish, although I don't want them to cut too fast. The expectation right now is to cut by 25 basis points. If they are going to cut by 50 basis points, then probably market will have a knee-jerk reaction of bearish, because cut too fast means, do you know something on the economy that I doesn't, so that you need to cut so fast? That's what people are fearing. So these two major narratives are going to push towards what I call the S&P 500 6K. So can everyone just help me type these 5 letters in the chat? SPX 6K, SPX 6K. Can everyone just help me type it in the chat, please? All right, very good. So let's see, based on past history, right? All right, if we're looking at presidential election, majority of the gains from in a US election cycle, all right? So here I'm looking at a PE cycle. and this is a research done by Carson. So average year for S&P 500 for a fourth year of a new president, which is like this year, then heading into the recession, right? Right now we are in September, all right? Right now we are in September. By the time December and next year, Chinese New Year, right? We are slated to have S&P 500 by 6K. So I want to ask you now, if knowing that this is that expected return or the gains that you know that later on after the presidential election, which comes in somewhere here, that's November, if you know that there is going to be such a bullish catalyst moving forward, would you rather take action now or would you take action later? Can all of you help me answer this question? Would you choose to take action now that you know S&P 500 is below 5,600, or would you want to say maybe closer to 6K lah? Then I think lor. Does it make sense to do it now or to do it later? To do now, right? Okay, very good. So if you know, if you would ask me this question, Jay, then why should I take action now? Why don't I just wait until the coast is clear? Well, you think about this in the history of investment and trading, right? When the coast is clear and super clear, do you think logically, there are any more profits to be made when it's everything so clear? It's just like if you want zero risk, you put your money in a fixed deposit. How much do you make? You make that kacang, you make that little bit, but you don't get that massive gains. I mean, life is fair, right? So massive opportunity, you are staring right at it. And if you do not want to take action on it, then nobody can help you. I mean, just very fair, nobody can help you. Okay. But if you do, then at least you know that you are not just looking at one narrative. The second narrative is as soon as September 18, which is 2 weeks from now, it will be a start of the Federal Reserve rate cutting cycle. And the rate cut cycle tends to lead to above market return. This is by Julius Baer, one of the investment banks, right? So tends to lead to above market returns because usually when they start to do rate cuts, then for the next 6 to 12 months tends to be okay. Thereafter, if there is any, recession fear on that, then it will taper off. But as of now, the US is still in a very, very safe place. And not forgetting, they are not printing money just yet. Right now, QE is 0. What is stopping them from printing money when it somehow somewhat sinks into recession? We have seen and witnessed the power during 2020, where the market just dropped 35% in 19 days. The Federal Reserve stepped in with an unprecedented $3.5 trillion pumped directly into the economy. And guess what? It goes higher. So humans are like this. Very interesting one. When you have tasted a quick way out, a fast way out of a fix, your next reaction will always, if I can go back to that, I will go back to that. Do you all agree? If you agree, can you please type agree in the chat? Right? So, makes sense, right? So in this sense, right, will Nasdaq try to reach close to 23K? I think so. I mean, both of them will likely move together. All right. So why I want to highlight these to you is because right here, right now, this is what is staring down at you. All right. This is what you are looking at right now. So the time is counting down because in Q3, which is right now, we have our interest rate hike cycle. In Q4, we have our presidential election cycle. And it's just like, let me draw an analogy. I'm sure some of you would have heard of Singapore property prices getting sky high. All right. How many of you have heard of, Singapore property, the prices cannot sustain, will drop? How many of you have heard of this saying? Can you type me in the chat? Have you ever heard of this saying? Especially locals, right? So everyone was like questioning, right? The prices can go so high one. How can it be? It cannot be, right? But my observation or my question back to you is this. For the last 5 years, for the last 10 years, where did the price of the property, where has it went? Has it gone up or has it gone down? So those people that say, no, so high, cannot, sure drop one. The fact is got drop or not? Don't have drop. Then how? Those people got buy or not? They also never buy. They sit there, become commentator. So who actually makes money from the market? Those who take action. So those that are crippled by their fear, irrational or rational, or whatever the case is, by their beliefs, those that didn't take action sitting on the sideline hoping for a miracle to come, when that miracle really comes, oh, bearish lah, don't dare to buy. So I thought you always wanted to buy. Then when prices low, good, what good for you to buy? Why you don't buy? Then end up, they just sit on the sideline. Then they end up becoming a commentator. They are not an action taker. So do you agree if you don't take action, you will not see any results? How many of you agree with what I said? Can you please type agree in the chat? Just let me type yes in the chat. Exactly. So my point is this. You are staring down at these two major narratives. You are looking at a very robust US economy. And right now, this is where you are. Sorry for the stickman. I only know how to draw stickman with my hand. Right now, this is where you are. So having seen these, armed with the numbers, armed with the expectation, armed with the analysis, how many of you will choose to take action now? Can you type me in the chats? Exactly. So hopefully what I say made some sense to you, because if you take action, you will be an ultimate beneficiary of it. If you don't take action, it's fine. I am already taking action. All right. So I also don't mind sharing with you. For me, if you ask me, do I trade? Yes. For my, I use a very relatable trading account. Like this account, if I can show you. This account I can show you. My this account, I started a year with slightly less than 4,000. All right. Slightly less than less than five, four plus lah. So P&L year to date, all right, P&L year to date, can you see it's about 2,200. How much of a return does it? This is a very, very small account. All right. I use this account as a starter account to share my new to my new traders because they don't have to commit with a bigger account. So I say, okay, I show you all with this amount. If you know how to do it, this is what you can get. So how many of you think that out of a, let's say 4,500, getting a 2,001 return, it's quite fantastic. It's about 40+% just for this, first 3 quarters of this year. How many of you think that this is a good result? Can you type good in the chat if you think so? Realistically, you're looking at 40+% return a year. And this is not even a year, right? This is not even completed. So this is what I do, all right? This is a live account anyway. Later at 9:30, you will hear ding, 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 ding. My position is ongoing, all right? So some of you now will have the question of saying, okay, Jay, I want to take action right now. How can I take action? How many of you want to know how? Ask me how. How do you want to know how? You just ask me how. Good. So in conjunction with the market trading conference, right? This one is in Q3. So following out the market trading conference, I was scheduled to speak at the IG event together with Alex, but unfortunately I have a conflicting schedule, so I didn't manage to do that. That's why we're running this booster. So what I'll be doing tonight, right, is that I'll be extending my offer for enrollment into my community in conjunction with the market trading conference lah. Okay, so in the next 15 minutes, I would like to share some things with you. And in this sharing, right, I want to share with you exactly what to buy, how to buy, and what kind of stocks do I focus on in order for me to take advantage of these two narratives. So can I have your permission to do so? Please type yes if that's okay with you. Good. Thank you. All right. Now, what I have to share, right, is you may be wondering, right, Jay, how does some of your students or you yourself, like for example, the position I have on right now, Costco, NSE. So NSE is okay. NSE, I got NVO. NVO was like, no, so lah. But if you look at Costco, I don't mind sharing with you. This is how NSE goes. Norfolk Southern Corporation. All right, this is how NSE goes. This is not like the Magnificent Seven kind of trade lah. All right, this is a very boring counter, a very boring company for railroads. All right, but did it perform brilliantly? The answer is yes, it did perform brilliantly. This position was just open 2 days. On Monday, Monday market was closed. So this was on Tuesday itself. So Tuesday, 2 days ago. So Tuesday, I got filled, and yeah, right now it's up about 330 US dollars lah. So is it like a lot? Okay lah, a bit here and there lah, few hundred here, few hundred there, it stacks up lah. All right. Then that's on NSE. If I'm looking at Costco, so Costco, can y'all see Costco is also quite nicely curated. I don't like personally, I don't like to trade stocks that are like this. Like, later gap down, later gap up, later jump up, later drop down. This one is very, very tough. Why? Because the movement is just very choppy. But stocks like this, okay, stocks like Norfolk Southern, stocks like this one is a bearish trade anyway. I also have a bearish trade on Boeing. So these two are the bearish trades. Then majority of the time we look at the bullish trades lah, because in the right place, the right time. And what I want to do is Nvidia. I'm also looking to pick up Nvidia, not at a current higher price, is of a slightly lower price. So these are the stocks that we focus on. Number one, we focus with a team. We look at the money flow. And then I want to take on explosive trades. Now, what is explosive trades? Explosive trades, right, are those that are literally swing trading. All right. We are looking at a couple of around 3 days to maximum about 3 weeks type of trade. So also known as swing trading. And this is something that I share extensively through my e-program, the Arts of Explosive Profits e-program, okay, also known as the AEP program. So can everyone just help me type AEP in the chat to acknowledge this? That means my trading duration is for a couple of days, all right, to maximum 3 weeks. So 3 weeks is around 15 trading days. Right? 3 weeks is like 15 trading days. So I'm not looking to hold for months. I'm not looking to hold for years. Neither am I looking for intraday. So I'm literally looking at a sweet spot period between 3 days to 3 weeks. All right. I will explain to you why. So the whole idea, right? The whole idea is that, for most investors or stocks, what's the most painful thing to any stock investor or stock trader? The notion is that the stock trader would have to be on top of everything. They will have to do a lot of research. They will have to pile into the financial statements of the company. They have to do fundamental analysis. So it becomes very headache, like a lot of numbers, right? How many of you have got this impression? If you don't mind sharing with me, can you type I in the chat if you have this impression? Stock trading are very leceh lah. I need to do research, need to track this, need to track that, need to also delve into financial statement. Well, that's the reason why I am not holding for more than 6 months. Because for anything that you are holding for more than 6 months, although you can say, Jay, but if you look at the chart, right, why only take, this explosive movement? Why don't you buy low, sell high? Like, buy low of the low. I buy here. And then I sell high of the high. I sell here. That is only possible if you are looking in hindsight. It just doesn't make sense for you to, to be able to say that's the low and that's the high. You know exactly where to buy and where to sell. So I'm not holding for more than 6 months. I would agree with you if you say, yeah, Jay, wouldn't you just buy low and sell high? You hold it through, you make a lot more money. Yes, provided you know where exactly is the low and you know exactly where's the high, which none of us do. I have no idea as well. So when I'm not holding for more than 6 months, I am in there just for an explosive move. All right, explosive move, meaning how long? 3 days to 3 weeks. So if that's a guide, all right? If let's say 2 days, 1 day hit our target, happy or not? Happy lah, faster lah. But majority is around 3 days to 3 weeks lah. So therefore, when I'm looking at such shorter term, not exactly intraday, because intraday, I don't really make all that much. I need a much bigger position size in order for me to make the dough, right? So what I do here is I'm finding the sweet spot in a couple of days, 3 trading days to maybe 15 trading days. So 3 weeks lah. Then I don't have to do all that much of a research into what this company does. I don't have to delve into the financial statements of the company because I'm not doing value investing. And I don't have to be tracking the news here and there. I don't have to. All I need to know is when is the earnings, when are the earnings, and then I avoid the earnings. Other than that, I just focus on where the money is flowing. That's all you need to track. Does it clarify things? If this helps to give you a sigh of relief, wow, heng, can you just type okay in the chats? All right, just let me type okay in the chat. So yes, we do track earnings, but we don't have to become like an analyst. I delve into financial statement, find out this company, do background check. Hello, we are traders, okay? We are not financial analysts. Okay? Clear or not? So do you need to like go and dig up everything like that? If you're a long-term investor, yes, you need. But if you are not a long-term investor, is there a need to? Very frankly, I tell you, my own personal trading no, I don't really care, honestly, because too short a period for me to care. So these are what is considered to be explosive, and these are the stocks that my traders are trading lah. So for example, I don't want to share with you something that's like from ages or eons ago lah. This is on 3rd of July. All right, this is on 3rd of July. Now, have anybody heard of this company called ZS, Zscaler? If you've heard of this company, can you type ZS in the chat? If you have not heard of it, then type no. Just let me know whether have you heard of this company. Have you traded this company? All right. So yes, okay, some of you did, some of you don't have. All right. So if you look at this, right, ZS, this is what we do. We don't literally, buy from the lowest of the low and go for the highest of the high. 3rd of July is somewhere towards the starting of July, which is whatever I've highlighted on screen. I've circled on screen right here. If I can, let me switch on to this red color. Okay, so this is what Linus, one of my students, have taken, and using the AEP framework, ZS, that landed him $2,311. This is US dollars, by the way. So how many days did this trade happen? The setup happened here. 1, 2, 3, 4. 4 days. All right. So can I check with you guys? For 4 days, using the right, catching the right time, using the right instrument in 4 days to make this amount, how many of you would in fact welcome a result like this? Can you type me in the chat? How many of you wish that this was you? Can you type me in the chat? Great. Thank you. So what is that formula that my students are using? Most importantly, it must be a formula, right? So number 1, we focus on explosive stock. Number 2, we don't look at those, right? We don't go and look at those stocks that are only the Magnificent Seven, only those that are like, very sentimental driven. I don't look at any of those. So this is by Linus as well. So this is Salesforce, CRM. So as you can see, Salesforce, right, took a tank on their price due to earnings. And then thereafter, if you see the date, right, this is on June 29th, somewhere towards here. So on June 29th, where was the setup date? 1, 2, 3, 4, 5, 6. This was when he closed out, all right? So 6 days. What did he do for him? $621 US. He already took 2 of the 6 contracts off. So 2 contracts netted him 621. The other 4 already shifted to 0 risk, meaning minimally he would have made 621, all right, for 6 days. And this is what we look at. We do something called profits stacking, all right? Can everyone just let me type profits stacking, or PS for short? Can you just let me type PS in the chat for short? All right, so what is profit stacking? Although you want to get, like, wow, 12,000, 14,000, 13, 11,000 per trade. Of course, all of us wish that we have, right? But if you look at even mine, all right, few hundred there, few hundred there, a few hundred here and there, every week, or all you need is every week get 1 trade. How many trade? 1 trade. Every week get 1 trade. You get 200 or 300, it stacks up. At the end of the month, it adds up to at least 500-600. So is that going to make a difference? I mean, with a $5,000 account, I think it's very decent. But of course, if you are looking for life-changing money, and of course, if your account is bigger, then the percentage will still apply lah. So with a $5,000 account, if at the end of a month, I'm getting 5 to 600 extra. If your account was 50,000, think about this, then you'll be getting 5 to 6,000 extra. Would that be able to help you, say, make your life slightly more comfortable to create additional stream of income? I believe so. I don't know. I don't know where is your standard, but I think 5,000, 6,000 US dollar, I think most people would, I see market start already. So most people would welcome it, right? So how many of you agree? If you do, can you please type yes in the chat if you do agree? How many of you agree? All right. So profit stacking. This is what we do. All right. So this is CC. CC traded Crystal. All right. She traded Walmart, and Walmart over here, you can see this is 25th of June. So somewhere in this period, where was the setup? The setup was on this day, 1, 2, 3, 4, 5, 6. All right. So 25th of June, setup was in this day. Again, 6 days. How much is it? 740. This is on US dollar. So how much is 740 US dollar? About 1,000. So this is about 1K Sing. All right. So one trade a week, you just capture one trade like this. That will stack. That will help to grow your account slowly. Like for example, as I'm just talking to you, okay, now that this market is live, I don't mind sharing with you. You see my my NVO is there. My NVO has a slightly longer time frame. My NSE is a swing trade. So right now, as you can see, NSE right now, just now was up 300, now it's up 380. So this is how it goes. So for me, right, my relationship with my students is that we do trade live together, and we make money, we make together, we lose together. I mean, just to be fair, right or not? It cannot just be all winning, winning, winning. So, okay. How many of you actually love something like this and would like to be part of something like this? Can you type me in the chats? If this is something that, okay, sounds kind of interesting. So can you just type me in the chat? All right, great. Thank you. So Walmart is, just let me pass through this. Elf Beauty. Elf Beauty is by CC again. This is a very obscure company. No many. In fact, I didn't hear of this until they shared with me. Like, hey, I'm looking at Elf. So where is Elf? Elf, this one was on 18th of June. So somewhere in the middle. Somewhere in the middle of here, Elf. This one slightly longer, slightly longer. 1, 2, 3, 4, 5, 6, 7, 8. So this one about 8 days, 336 US dollar. So okay 8 days, that 1 week again, about 336 US dollar. So it's close to about $500. So these are the type of trades that we take. All right. We don't just focus on those so-called technology stocks, the Magnificent Seven. We don't. We look at stocks that are hidden, with a hidden potential. It doesn't dominate the headlines. And this is what we do. All right. Because I strongly believe that if you look at what all other people are looking, then you simply have no edge. It's just like you go to Sim Lim Square, for example, in Singapore, right? Shop A sells computer stuff. Shop B sells computer stuff. Shop C sells computer stuff. You think shop A, B, C, what can they be competing on? Price law. My price is cheaper than you. That's it. Because all of us selling the same thing. So in trading, is the same thing. If you are trading the same old stocks as what most of the other people are trading, what can you expect? You can just expect normal outcome. So what is a normal outcome for most people? Normal outcome for most people, simply put, majority of the trader, I think 70% of traders, they lose money. Why? Because they all look at the same few type of stocks that are giving them that kind of inconsistency. The reason, not because we are smarter, not because we are faster, but the reason why for my students and myself, what we focus on and gives us a different result is because we look at different stocks altogether. All right? Does it make sense? Type yes if it makes sense to you. Okay? So the AEP program, right? It's entire 100% online e-course. All right? So that means this one, it's a e-learning program where you learn it on time, on target. That means at your own free pace, you learn it 24/7 access. So as soon as you enroll, you will be having access to this, and then you will be added to my community where every week there are 2 trade calls for you to take action on, for you to do your analysis on. All right. So what we do is that I do not want you to just know how to long. I also want you to know how to short. Both long, taking advantage of the up direction, and short, which is taking advantage of the down direction. How many of you agree that knowing how to both long and short, having that flexibility to deploy your strategy, how many of you agree that this is important? Can you type yes in the chat if you agree? All right. Now, what will you get, right, is that you will be added to my Facebook group. All right. There will be a graduates Facebook group of which I can share with you. So let me just pull it up. So let me just pull it up first. So this Facebook group, right? Just in case, Jay, are you a fly by night type of thing? No. There are 1,200 plus members that came before you, right? You are not the first, and you will not be the last. So the only reason why you may or may not have heard of what I do is because unlike many commercialized establishment or communities, I don't run a lot of all those like what advertisements here and here that I don't disrupt your YouTube experience lah. That's not what I do lah. But every single week, right, as you can see over here, this is where for this week you can see 29th of July to 2nd August. So this is people bump this up. So over here, 2nd September to 6th September, we have SPG and TJX. So you realize these are the companies that we don't really hear of them. And Simon Property Group, that's SPG. TJX is TJX Co. I believe is in retail, right? So we focus on this, and then we apply the AEP framework to it. That's what we do. You'll be added to this group for lifetime, and then in the portal itself, you will be given a trading plan template, all of this for you to be able to take action. All right. So everything else is all provided for as soon as you enroll. All right. As soon as you enroll. So once you enroll, right, you will be given this membership portal where if you look at under the AEP program itself, right, from number 1 all the way to 15, right, it's all bite-sized lesson. The longest lesson would be, I believe, lesson 10, which is about 50 over minutes. So yeah, this is 54 minutes for lesson 10. And this one shares with you how to do the swing. And then thereafter, there is long, there is short, and then that's what you do. So this is immediately after you enroll, this is immediately what you will get access to. All right. Is everything clear? If you are clear, please type clear in the chat. If you are clear. All right. And besides that, you'll be invited to join my graduates Facebook group for lifetime. And there will be 2 trade calls that will be sent out to you every single week via the Facebook group. The trading plan template, this is on the portal itself. So basically everything that you need to kickstart this journey, it's already there. All right. All good. If it's good so far, can you just type good in the chat? So how is your journey going to be like, right? With when you enroll today, let me just pull up the schedule. What is going to happen, right, is when you enroll today it's on the 5th of September, all right? So just do this. Okay, what is this? So when you enroll today, 5th of September, you will be given 2 weeks. All right. You'll be given 2 weeks to learn. So the 2 weeks, in the next 2 weeks, I want you to be able to learn it. And then thereafter, right, your next phase would be on the I need to confirm with my team, but we are looking at end of this month, either the 23rd or 30th, either one of it, there will be a live trading session. All right, there will be a live trading session for you. So this 2 weeks, once you enroll, you learn it, and then thereafter, you come back for the live trading sessions where we will apply. All right, we will apply the live trading strategies, the AEP strategy in live context. And thereafter, right, there'll be 2 times of live trading strategy, the 2 times of live trading session for you. The first one is either one of this. I need to check with my team first. Okay, but you just take note, it's on a Monday. Should be 30th, if I'm not wrong. Should be 30th. Then the next one will be subsequent week. And then, so this is live trading session 1. This is live trading session 2. And then thereafter, you are kept in the community, all right? So in the community, right, what we do is there will be continuous every quarter, every now and then, will be updates that are sent to the Facebook group. So you are not just doing it yourself, but you will be added, you'll be part of the community of which the traders are carrying out and doing the explosive trades lah. So this is basically how your whole journey is going to be. All right. So I've designed in such a way that this one, the learning, it is self-initiated, self-directed learning. So that's what you do, self-directed learning. And after you have done your learning, then you come back, we do the application together. And then for Facebook, every week we have the trade calls that are ongoing every day. Trade calls that ongoes every week. We will send out at least 2 counters, right? So that's what we do. Is everything clear? All good? So this is literally what we do lah. I mean, like June 5th, this is starting of June. Where was the setup? The setup was here. 1, 2, 3, 4. I mean, not the low lah, slightly higher. 1, 2, 3, 4, 5, 6, 7. So 7 days. How much is that? This is using CFDs. So this is using CFDs, 521 Singapore dollars in 7 days. That's how we trade the explosive stocks lah. Then this is by Steven. So Steven, you can see this is 31st May. So 31st May is somewhere over here. When was this position in? So this Netflix position was in on this day itself. So this one went up 1, 2, 3. Then I've just stagnated for a couple of days lah. So all in all, this trade took about close to 3 weeks. All right. So how much did he make on this? Everything add up is the amount is here lah. So two different trade lah. This is on AA. This is on Netflix. Over there. So Netflix, this Netflix. AA is another chart. So NFLX. So Netflix, 2 trades, 136 plus 55. Because this one really stagnated, didn't go much. So it closed out the trade. That's about close to $200 over there. Then for AA is another one. So we do what we call profit stacking lah. And just to give you a full transparency, I don't like to show you just one stock by one stock. What I do is for every of the stock that I send out every week lah. All right. Every week I'll send out 2 stocks. So it has been since 2022, I have already taken the record. So I was looking at the record since 2022 and then through 2023 and finally now 2024. Now, do you all agree if in a short term any trader can get lucky in the short term? How many of you agree with this? Type me in the chats. If you do, can you please type me in the chats? Hey, everything okay or not? Everything okay? Can you just give me some response, please? Okay, good. Thank you. Now, so since 2022, we keep track of this. Initially, when I do this, right, what was the reason? The reason is because number one, to promote accountability and transparency. Number 2, is this stressful on my part? Of course, yes lah. So my team was like asking me, Jay, are you sure you want to do this? Because once you do this, right, it can go 2 ways. It can work out very well, or it can backfire. To me, I told my team this. I say, if you cannot even back up what we say, right, then what's the point for us to continue doing this? I think there's no point lah. So that's why I told them, despite the so-called while this may backfire, I say, hey, let's just take it 1 week at a time. Let's focus on our methodology and let the trade take care of itself, of which I think now looking back, I think it did lah. So to share with you what is ongoing here, number 1, there are trades that will be put out every single week. So 2 trade calls. This one January 13, this one only got 1 because we scan through everything. We don't have really very hard, but majority of the week we got at least 2 over there. So what happened is there will be 2 parts. Number 1, these are all the potential, which is what will be sent out to the Facebook group. All right. So these are the potential. Then number 2, right, whether we eventually take a trade or not depends on whether it fulfills the rules. So if it fulfills the rule, then we will go on to have a trade. If we go on to have a trade, it's a losing one, bo pian. But if it doesn't fulfill the rules, meaning now I see this potential, child swap, for example, but it didn't continue in the way that I want it. So ended up, there was no trade. So no trade means no trade lah, didn't fulfill the rules lah. Those that fulfill the rules, yes, there was trade. Those that didn't fulfill the rule, there was no trade. So to give you a statistic breakdown, The whole of 2023, total we have 109 selections, potential. Total trades that we have taken, 74 of them went on to have a trade, of which the 74 that we actually took a trade on. So bearing in mind there were 52 weeks. So in 52 weeks, we got 74 trades in a year. Is literally about one to 1.5 trade. Some trades, some weeks you got 2 trades, some weeks you got 1 trade. So on average, it's about 1.5 trade per week only. So literally, we are just looking at 1 trade a week. It doesn't take it doesn't take a full-time commitment or anything. All right. Winning trades out of the 74, 54 winning trades, 20 losing trades. That gives us a full year win rate of 73% win, which is 27% loss. How many of you think that this result is good? How many of you think so? If you think so, can you type good in the chat? If you think so. If you think that this result is like, wow, okay, over a year, okay. I mean, we don't get lucky in like 1 month, 2 months, but it's over a year. If you think this is good, all right? If you think this is good, let me show you this here. I'm even astonished myself, honestly, this year. So this year, this is what happened. If I can just center it a little bit. This year, 2024, total selection 50, which means the potential, it's over here. Total trades, about half only. Many of them didn't make it through our rules. So the full trading rules are shared within the AAP program itself, the full trading rules. And 28 of them went on to have a trade. Out of the 28, 23 was a winning trade, 5 was a losing trade. So it gives us a staggering 82% win rate and 18% losing rate. So now, how many of you think that, wow, this is better? Let me type wow in the chat. So this is really what I do day in, day out, week in, week out. And I don't just share with my students what to do, but instead I also look at the trades myself. And then, and we keep a transparent record of all this. And upon request, usually we just make it available for the student, right? So these are all following the rules. There's no way I can house xiao, I can just make up all this. I'm not so free, tolong. So this is what we do. And most importantly, right, average win, we are looking at about 6% for wins, and average loss is about 5.89%. So expected return is around 6% per trade. Expected return is about 6% per trade. So this is what we do by focusing on explosive stocks. Therefore, if you look at some of the ticker symbol here, right? ELF Beauty is over here. This is Eli and Lilly. This is Synopsys. This is Dynatrace. This is Bank of America. This is DR Horton. So Bro is Brown and Brown. Then UAL is United Airlines. WM is Waste Management. So all these companies, right, they are not your typical FANG stocks. And this is why it gives us the success that we have. So practically, this is it is what it is. Okay. So what is the rule? The rule is number 1, don't do what everyone else is doing. Number 2, focus on the hidden gems. And this is what it can be done for you. So in my community, what I do is, some my students will also share their results with me. Right? My students will always share their results with me. For example, over here, you can see that this is UNH. And then after that, this is on CELH. So how much is this? 2,816. This is just taken most recently only. You can see 28th of August to 4th of September. Then 2,800, blah, blah, blah. So we tally all this. This American Tower, this is by Jacob, using the AAP framework as well. 402 Singapore dollars, right? So profit stacking, this is what we do. So collectively, if you just look at what happened in July, right? I have not tabulated the one in August. But collectively, if you take a look at it, through the whole community, we generated about 320,000 worth of profits. So this is for traders by traders. Literally, this is what we do in our small trading community. I don't aspire and I don't aim to have the biggest trading community. I know many other communities out there have like 5,000, 6,000 members. I don't have. I mean, I've been doing this for so long. I only have 1,200 lah currently. So today, right now, just in case you're wondering, right, Jay, is this going to cost me an arm or a leg? The answer is no. I want to make it so simple for you that even one trade will allow you to recoup back your cost fees. Does this sound fair? How many of you find that this sounds fair? If you think so, can you type fair in the chat? One trade, you will be able to recoup whatever that you have invested. Good? Yeah? Great. Thank you. So today, as in conjunction together with the market trading conference, all right, the market trading conference, if you choose to enroll, this is what you will get. Number one, you will get immediate access to the Art of Explosive Profits e-program. Okay, so this is what you will get. On top of this, you will get 2 live trading sessions, live trading 1 plus live trading 2. And then weekly lists will be sent out via to your Facebook group. So my ad hoc market webinars will be here in the Facebook group, weekly list to the Facebook group. Community Telegram channel, this is like a more of a sharing channel lah, all right? But your key benefit or the key thing that you should be looking out for will be in your Facebook group. And the trading plan and learning resources, all this will be given into your portal. And the best part is you can just ignore this because I'm going to make it into a no-brainer so that one trade, it can recover whatever they invested. All right. So I'm going to show you how. I'm going to change this. I'm going to cancel all of this and change it into a one-time enrollment. Can everyone just type number 1 for me? 1x. It's just a one-time enrollment and it's not even at this price. It's a total no-brainer. Why? Because I will show you one trade can recover one. All right. Of course, you don't tell me your account $50 lah. If your account is in a healthy range of between 3,000 to 5,000, okay, for stocks trading, right? Within healthy range of 3,000 to 5,000, one trade, at most lah, 3 trades lah, you can recover this. All right. That's something that I have been doing, something that most of my students have been experiencing. So today, when you enroll, this is where you can enroll directly. You can just scan the QR code. All right. You can just scan this QR code, or if not, just click on the link that Alex would just paste on the Alex, I think you need to change the settings. Okay, good. So yeah, so you just click on the link, and what you will do today, all right, what you will enroll at today is just a one-time payment, one-time fee of Singapore $497. So not $997, but one time of $497. So how much is this? Do you know? Today, I went down to my neighborhood kopitiam downstairs. 1 cup of coffee, kopi peng. I always like to drink iced kopi. Right? So kopi, it is $190 per cup. Right now, $190 per cup. If you take 497 divided by 365, so if you take 497 divided by 365, you are just looking at $1.36 per day for the next 1 year. All right. $1.36 for the next 1 year, which is not even 1 cup of kopitiams, kopi peng. That's it. And this is why, if you ask me why do I put it to this ridiculous amount, is because ridiculous to me, because I have to give you lifetime support. Okay, don't forget this. I have to give you lifetime trade calls. All right, you'll be part of my community lifetime. I don't charge any subscription for this. This is not my stuff. And when I do that, and I want to make it into so low a resistance so that with one maximum 3 trades, you will be able to recoup your investment. I think that's fair. So am I going to do this for free? Obviously not. But is this going to become like, is 497 going to make me very rich? The answer is no. So because considering the commitment that I have for you for the next lifetime. So to me, I find that this is a very relatable, and I find that this is a fair amount, a fair investment on your end to show me that you have the skin in the game as well, to take advantage of the opportunities that are upcoming. And this is why I'm here today sharing this with you. All right. So guys, of course, if you have any questions, please do ask me the questions. Alex, if you want to come back on air, you got some questions, you can ask me as well.
All right. So once again, thank you, Jay, for your sharing. There is a question in the chat. Okay. So Cassandra is asking, right? I
Yes.
am unable to attend the September session. Can I enroll first and take the course at a later date?
Okay, Cassandra, this course immediately tonight after you enroll, right? Immediately after you enroll, you will get the access to it. You can learn it OT. No, sure, no problem. On time, on target. You can definitely take your time to enroll. Should you not be able to make it for the live trading session, which is likely on the 30th of September, I need to double check with my team. So if you are unable to make it, replay will be sent out and you will be given the invitation to come back for a second one for the next replay as well. Yeah, I mean the next live trading as well. So yes, that will be given. Thank you. Thank you, Cassandra.
Yeah, well, just to add on, the live trading session that is also recorded. So just in case you can't make it for that live session, it is recorded. You can still watch it at your own pace after the live session is over. Okay. Q&A. There's one by Jing Yi. Okay. So the e-course easy to understand? What if I don't understand?
Okay, I think this is a fair question. The e-course is not done by anybody else. As in, I've recorded the program myself, so you'll be hearing a lot of my voice. So today, if you have sat through the whole session today, tonight with me, you can understand the way that I have shared certain concepts. That is exactly the way I teach, right? So I'm sure you have no problem starting off with the e-course, and with the e-course itself, right? One of the in fact, I just share it on screen right here. So I do break down the market right from the start. So you even if you're new to the market, you don't have to like, wow, I'm very new to the market. How are you jumping straight into strategy? For me, no. I always share with you, how do you break down the market, and then how do you build out your watch list of stocks so that you got some bread and butter stocks, and then what exactly are you going to do on them? So if you can follow and understand what I have been sharing with you tonight, I do think you will be able to understand. And of course, what if you don't understand? There's always this fear, right? That's why you are joining a community. It's not you take this course, you OT, then you kaki kao team lah. No, it's not like that. The coaches are here. You can always ask us questions. You can send us questions. That's why we added to a Facebook group as well. You can ask us the questions. You can, yeah, basically what I want to say is you are not doing this alone. And I've been running this for many years right now. So 1,002 members before you, and yeah. So don't worry. Alex is also inside also.
Yeah, so should not be that difficult for you to understand, because I find that it is pretty easy to understand, especially if you have traded before, you have traded anything in the stock market, basically you have some experience trading now, then should not be that difficult lah, okay? All right, as mentioned, there's also coaches for you to ask questions.
Yeah.
And I see a common question by Larry, okay, in the chat. Okay, what happens after 1 year membership? Okay, I think Jay, you want to answer that again or not?
There is no membership. It's just a one-time payment. And I have to support you for lifetime. So Carl, to clarify, 497, is it a year membership or lifetime? Lifetime. I wish it can be a year. Maybe I should change it to a year, right? Since everyone asked already.
Yeah, so Larry, I will see you inside the Art of Explosive Profits. So I believe your question is cleared. Okay, so it's a one-time 497 Sing dollars. It's not even US dollars. Okay,
Yes.
so 497. All right, any other question? So
Carl's question have been answered as well.
I saw Carl, answered the question already. So it's also 497. Any other question? Okay, regarding the market, regarding the course itself. Okay, once again, just a reminder, it is an e-course. So once you make the payment, okay, you can create your account, you can access the e-course, own time, own target, and so-called finish the course itself. And then there will be a 2 times live trading session. Okay, so as what Jay mentioned, it'll be somewhere around the end of September.
Yes.
Tentatively 30th lah, but if there are any changes, then the team will update you again. And once again, the live trading session, it is recorded. If you can't attend for the session, don't worry, it's recorded. If you can't, then wait for the next live trading session again.
Yes. So at least every quarter I will run at least one round lah. So you all can always come back. Yep. So any more questions, guys? If you got questions, can you please ask? I'll be more than happy to clarify. Even if it's on market questions, you can just let me know.
Yeah, regarding the cost, regarding the market, okay. enroll. Cassandra said, Cassandra, have you enrolled already?
Thank you, Cassandra.
Or you are already an AEP students already?
Thank you, Cassandra.
Okay,
Right.
so right now there are still 73 attendees in this webinar room. So what are you guys waiting for? But I don't see any question. And you guys hang around here must have some questions, right? Or are you waiting for Jay to give you some secret tips?
Secret keeps. I don't know, eh. The Alex, what do you think about the market?
uh, Market is a bit tricky right now. I mean that
I don't know. It's like
not
don't
that
want to go out, don't
easy
want to go
to
down. The
trade.
timing not yet there, right?
Yeah, timing not here, not there,
Yeah.
one day up, one day down, not the easiest, okay? All right, but that's the reason why you need a so-called a coach, okay, to guide you, okay? So you are not alone. So I think the AEP will be a great way, okay?
Mm.
Jean Yo, should I sell or wait till after the Fed meeting?
I see. It depends. What's your plan? What? Most people, this is a very interesting question, because this is actually one of the most common question that for us as coaches, right? What we receive lah. And my default answer will always be, what is your plan initially? I think it's just quite scary if you bought in without knowing where to exit, if you do not know your plan. I will akin it more to gambling rather than just buying. And I can't just be sharing whether you should sell now, because I got no context. I don't know whether have you bought in a lower price? Did you just buy in recently before the crash? Or yeah, also that number one, there's no context. Number two, uh it always goes back to what is your plan. If your plan is to tell you're gonna hold for a certain period, then you hold. If your plan is to say, hey, I just want to trade the up move, then you just act in accordance to your plan now. So this is something that if I may add on to this point, something that we stress on for the AEP framework. The fact is, are the students, utilizing my methodologies? Are they automatically becoming good traders like this? The answer is no. These are the students that have followed the rules and they trade with a plan. Initially, when they first joined, some of them were new, some of them have zero experience. Some of them don't even know, this is how I set my stop loss, that's how I set my profit target. But step by step, as we come in, we come through, and they can see where I'm bringing them to, what kind of stocks we are focusing on, and they trust the framework lah. So every time I share with them lah, you trust the framework lah, don't trust me lah. You get what I'm saying? You trust me in the useless one. You trust Alex, don't trust me. But you trust the framework itself. That's what gets us the result. So that is the framework that I trust by. That is the framework that my students trust by lah. So you think about this. If they don't make, then why would they share this with me? And this one goes on every single day, okay? 27, 28, then when is this? 29, 30th, and yeah, so on and so forth. 31st, September 4th, 3rd. How come they are doing this every single day? So this is what we do, lor. Yeah. So Jean, thank you for that question. Rina, is the trading on stocks, futures, or others? Sorry, it was late. Don't worry. It is on stocks. All right, it's on stocks. So I'll be sharing with you how you can be using CFDs on stocks. So CFDs will help to optimize your trading. Your trading amount. So how much do you need to start with? Right at the start, I would say at least 3,000. At least 3,000 Singapore dollars. If you got a couple of $100, I don't think you are ready to start, because when stocks is concerned, it requires a little bit of capital, and 3,000 I think should be a comfortable sum. If it's not comfortable with you, then this is not suitable. All right. So company have given stocks and held over many years. Share already hit all-time high. Good lah. Then continue to hold it lor. Hit all-time high, good. I give it to you as a stock option for free. Very good, ma.
And no risk, right? Risk free, right?
Yeah, risk free is very good. Yeah, great. You're most welcome, Rina. You're most welcome.
Okay, so right now we still have about 60 people in the room. So
Yeah.
what's your concern? Any question? So or are you just waiting for another more discount? 497 is the best discount already. Okay, so it's a very good price. Okay, once again, remember to key in your coupon code MIVS0924.
Yes.
Once again, I posted the link once again. Okay.
Yes. So please remember to please remember to this is please remember to bit.ly/AEPMWA. Just share with you all. So please remember to apply the coupon code. So initially you go over there, you can see it's 997 MIVS0924. Please click apply, and then you should see the price changes to 497. All right, please apply. Don't give me extra money. Nick, what is my take? Whether it's a soft landing, a huge rate fat cut, huge fat rate cut between? Is it this or that? I think it's this and that. No, I don't think there's a huge fat rate cut. I think 25 basis point, more or less. 25 basis point, more or less. So is it soft landing? Yeah, I think so. As of where things are going concerned right now, it's not the shit hit the fan moment. There's no even shit in the bowl, so it's fine. Right? So thank you. Now, with the Norris, good question. With the cost cover options, the program itself only cover underlying stocks and using CFDs, all right, for doing the swing trade. They've answered that as well. Done. Thank you. Now, what if, Rina, we are slow? How often does it? So, Rina, to allay your concern, every single week, we will send out the list because we are not doing intraday. You don't have to be worried about whether you are slow, you are fast. No prizes for being fast, but it will be sent out every week during the weekend. And then you can just take your trade before the market open. Because we are doing swing trades, most of our trades are ranging between 3 days to 3 weeks. We have time to take action. We have time to key in the orders and send. It's not like intraday fast and furious one. Oh yeah, immediately I miss it and no more already. So that's not something of that should be a concern. All right. So thank you, Rina. You're most welcome, Nick. Thank you. So that good. So,
okay, so yeah, we are already like past 10 already. So one last call. I already posted the link in the comments. Okay, so yeah, head over to the link and key in the coupon code, and we shall see you inside the course and also in the Facebook group as well. Okay, any last word for Jay or any last question for Jay?
Yep, all is good. Trade safe. I think it's very exciting market to come, given that you can see even Nvidia yesterday dropped, not Nvidia, Nasdaq, right? On Tuesday it dropped so much, and then now it's like sitting down here. Remember, you are staring down at the opportunity of a lifetime. The first one comes on 2 weeks from now, on the 18th. The next one comes in November. Should be November first week, if I'm not wrong, the presidential election. So you do not only want to, never mind lah, wait lah, and then see how lah, and then it's okay lah. I mean, those who take action would have benefited from it, and if you're just sitting on the sideline, then you continue to sit on the sideline and wait lah. I think it's fine. So just there is this action that long come one time, and we just have to take action based on it lah. I mean, the way I see it is this. All right. So thank you so much, everyone. Thank you for tonight. Thank you, Alex.
Okay, so once again, thank you, Jay, for your sharing tonight. So with that, okay, we have come to the end of the webinar tonight. Thank you so much for staying with us until 10 plus. So once again, one last call, the link in the chat, and see you guys inside the AEP program. And with that, have a good evening and good night. Goodbye, everyone. Thank you. Bye-bye.
Goodbye, everyone. Thank you so much. Goodbye.